On October 28, 1974, President Gerald Ford signed the Equal Credit Opportunity Act into law. Women could now apply for credit in their own name. No husband's signature required, no father's cosign, no reason needed other than their own financial record. The banks did not celebrate. Most of them complied with the letter of the law and ignored the spirit of it entirely. Loan officers who had spent careers denying women credit now technically had to process their applications, but processing an application is not the same as approving one. Women who walked into the same banks that had rejected them for decades found the culture unchanged. The forms were different, the attitudes were not, so some women decided not to walk into those banks at all. If stories like this matter to you, please subscribe. This channel recovers what history forgot to write down. On August 26, 1973, the 53rd anniversary of women's suffrage, two women in Detroit named Valerie Ungers and Joanna Parent opened the doors of the Detroit Feminist Federal Credit Union. The law had not yet changed. The ECOA was still 14 months away. They did not wait for it. The Detroit Feminist Federal Credit Union was the first lending institution in the United States built on the explicit principle that women's financial needs were legitimate. Their creditworthiness was real, and no male signature would ever be required. Their founding literature put it plainly: the field of money and finance is male-dominated, mystifying, and outrageously discriminatory against women. It is not enough to pressure that male-controlled system into throwing us crumbs of credit. We want financial control of our lives. They opened with a handful of members and a borrowed office. Within 2 years, they had hundreds of depositors and an active loan portfolio. Women came in for car loans, denied elsewhere. For mortgage applications, traditional banks had never taken seriously, for the simple act of opening an account in their own name without a man standing beside them. The credit union funded divorces. It funded the first apartments of women leaving marriages they could not otherwise afford to exit. It funded small businesses the banks called unviable. One of its first loans went to a woman named Sandra, who needed $800 to start a daycare in her home. 3 traditional banks had refused her. The Detroit Feminist Federal Credit Union approved her in a single meeting. Sandra's daycare was operating within 6 weeks, and she repaid every dollar within 18 months. After Sandra came Patricia. After Patricia came Denise. After Denise came a woman named Gloria, who needed $1,200 to buy out her business partner and had been told by 2 banks that her beauty salon was not a viable commercial enterprise. The Detroit Feminist Federal Credit Union approved her in 4 days. Gloria's salon was still operating 11 years later. The credit union charged interest rates comparable to commercial banks. This was not charity, it was banking. The difference was the evaluation framework. Where a traditional bank saw risk factors, female, unmarried, self-employed, no male cosigner, the Detroit Feminist Federal Credit Union saw a business owner with documented income, a clear repayment plan, and a track record of managing money in circumstances the traditional system had never been designed to accommodate. The institution reviewed every loan application with an all-female panel, not as a political statement, but as a practical correction. For the first time in American banking history, the person deciding whether a woman was creditworthy was a woman who understood exactly what creditworthy meant for someone who had been systematically excluded from the system that measured it. It closed in the early 1980s. A combination of funding pressures and internal disputes ended it before it could outlast the movement that created it. But it had already proved the point. A financial institution built by women, run by women, and designed for women could work. It could meet real demand. It could change real lives. Women in Maryland, Washington, D.C., and several other cities came to the same conclusion independently within months of the Detroit Credit Union's founding. The Twin Cities Feminist Federal Credit Union opened in Minneapolis in 1975. The Women's Credit Union of Santa Fe opened the same year. The New Haven Feminist Federal Credit Union launched in Connecticut. By 1976, there were feminist credit unions operating in more than a dozen American cities, each one serving a community of women who had been told in writing, on denial forms and rejection letters, that they were not creditworthy. Each institution had a waiting list. The demand exceeded what the available capital could serve. Women who had been told for decades that they were too risky to lend to were arriving at these credit unions and banks in numbers that proved the opposite, that the risk calculation the mainstream banking system had been applying was not a financial assessment. It was a prejudice with a number attached to it. Each institution was small. None of them had the capital base of a commercial bank. But together, they represented something that had never existed in American financial history, a parallel lending system designed from the ground up around the assumption that women's financial decisions were sound, their businesses were viable, and their futures were worth investing in. In 1975, the most prominent women's bank in American history opened in Midtown Manhattan. The first Women's Bank of New York was a federally chartered commercial bank, majority owned and operated by women, with $3 million in startup capital raised from 7,000 shareholders. Its first president was Madeline McWhinney Dale, a former officer at the Federal Reserve Bank of New York, one of the most credentialed banking executives in the country. The idea had been initiated by Eileen Price, vice chairwoman of the New York State Democratic Committee, and Betty Friedan, whose 1963 book, The Feminine Mystique, had helped spark the women's liberation movement. The bank offered checking accounts, savings accounts, personal loans, business loans, and mortgages. It maintained a financial library for customers who had never been taught how the credit system worked, because the system had spent decades ensuring they would not need to know, since they would never be allowed to use it independently. It ran education programs on investments, insurance, and financial planning for women who had spent their adult lives excluded from these conversations. On opening day, the line stretched around the block. The bank's first mortgage went to a single woman, a category of borrower that had been functionally unbankable for decades. A nurse named Patricia, 41 years old, earning $14,000 a year with 12 years at the same hospital, had been denied mortgages at 4 Manhattan banks before walking through First Women's Bank's door. She was approved within 72 hours. She kept her approval letter for the rest of her life. A bookkeeper named Eleanor, 53 years old, walked into First Women's Bank in 1976 with 30 years of employment history and $4,000 in savings. She had been denied a small business loan by 3 banks to open an accounting practice. First Women's Bank approved her $6,000 loan in 5 days. She opened her accounting practice that spring. By 1980, she had 3 employees. By 1978, deposits exceeded $13 million. The bank had approved loans that every mainstream institution in New York had declined. It had created jobs for female banking professionals at a time when women were nearly invisible in banking management. It had, in 3 years, done more for women's financial access in New York City than the Equal Credit Opportunity Act had managed to achieve on its own. It was sold in 1986 when its female leadership was replaced by a male executive named Martin Simon, appointed by new investors who had no personal money in the bank. It closed permanently in 1992, 17 years. The bank that changed the financial landscape for thousands of New York women lasted 17 years before the system absorbed it. The same year the First Women's Bank opened in New York, institutions began opening across the country with the same purpose and the same urgency. Women's Bank of San Diego launched in 1976 with a specific focus on small business loans for women entrepreneurs. Its founder had been told by 6 San Diego banks that her expansion plan was too risky, despite 4 years of profitable operations. She opened Women's Bank specifically to fund the businesses the mainstream banking system refused to believe in. Within 2 years, it had a loan portfolio heavily weighted toward female-owned small businesses, restaurants, retail shops, cleaning services, childcare centers, enterprises that traditional banks had consistently undervalued. In San Francisco in 1976, Western Women's Bank focused on women in the financial services industry itself. It trained and employed female banking professionals at a time when women were invisible at the management level of traditional banks. A customer walking in for a business loan would be reviewed by a panel that understood from personal experience what it meant to be told no, simply for being female. Los Angeles got its own institution the same year. The first Women's Bank of California opened in 1976, and within 18 months had $9 million in investments. Women business owners who had been denied commercial credit came not just to borrow, but to deposit, choosing to put their money in an institution that would lend it back to women. In Richmond, Virginia, Women's Bank opened in 1977. In Greenwich, Connecticut, Connecticut Women's Bank opened the same year. In Washington, D.C., Women's National Bank opened in 1978, and in its first 10 months took in deposits exceeding $7 million. In Denver, Women's Bank N.A. opened on July 14, 1978. On its first day of operation, deposits exceeded $1 million. B. LaRae O'Rulian, the bank's first president, later described what she observed when women walked in for the first time. Most of them had never been inside a bank where every person behind the counter was a woman, where the assumption at the front desk was not suspicion but service, where being female was not a risk factor. It was just Tuesday. 2 years after opening, Denver's Women's Bank deposits had grown 95% to $14.4 million. The Women's National Bank in Washington, D.C. hired female economists, female loan officers, and female branch managers at a time when these positions were occupied almost exclusively by men at every traditional bank in the city. It trained a generation of female banking professionals who then moved into mainstream institutions, carrying skills and standards that those institutions had never bothered to develop. The women's banking movement did not just serve female customers. It trained the female bankers who would eventually reform the institutions that had excluded both of them. The banks worked. They were not idealistic experiments that collapsed. They were financially viable institutions that met genuine demand, grew their deposits, built loan portfolios, and served hundreds of thousands of customers. They did not fail because they were weak. The environment around them changed. By the early 1980s, mainstream banks had begun actively competing for female customers, not out of principle, but because the women's banking movement had proved the market existed and was profitable. The banks that denied women credit in 1965 now advertised to them in 1982. The women's banks that had spent the late 1970s building a market were now competing against institutions with vastly more capital and decades of established customer relationships. By the mid-1980s, 3 of the remaining women's banks had deleted the word women from their names entirely. The First Women's Bank of New York became the first Bank of New York under male leadership. The mission language disappeared before the institutions did. But one institution, built on the same principle, did not close. One survived, merged, grew, and is still operating today. Maggie Lena Walker established the St. Luke Penny Savings Bank in Richmond, Virginia in 1903, 70 years before Valerie Ongers and Joanna Parent, opened the Detroit Credit Union. Walker was the first woman in American history to charter a bank. She was Black, the daughter of an enslaved couple, raised in Richmond during the era of Jim Crow. She joined an African-American charitable organization called the Independent Order of St. Luke as a teenager and spent years building it from the inside before standing at its 1901 convention and describing her vision: a savings bank, a newspaper, a factory, an emporium. She wanted to build an entire economic ecosystem for a community that had been decided it deserved none. The bank's name, Penny Savings, was not a diminutive. It was a statement. It said that the deposits this institution valued were the ones the mainstream banking system had decided were too small to bother with. The pennies, the dimes, the carefully folded dollar bills of Richmond's Black community were the foundation of Walker's institution. She understood that the people with the least access to the existing system were the people who most needed a reliable alternative to it. In 1903, she opened the St. Luke Penny Savings Bank with depositors who brought in their pennies, their dimes, their carefully saved dollar bills. She had no access to the capital markets that funded white-owned banks. She had no connections at the Federal Reserve. She had a community that needed a bank, and a conviction that she was the one to build it. The bank survived the Great Depression, which destroyed thousands of American banks with far more resources after merging with two other Black-owned Richmond institutions to form the Consolidated Bank and Trust Company. It operated continuously for over a century. It is the longest-running Black-owned bank in American history. Walker never waited for the law to change. She built the institution 70 years before the law caught up with what she had already proved possible. The women who opened Detroit's credit union in 1973 were doing what Walker had done in 1903. The women who opened First Women's Bank in New York in 1975 were doing what Walker had done in 1903. The principle was identical. If the existing financial system will not serve you, build one that will. Most of what they built is gone now. The names are off the buildings. The loan files are archived or destroyed. But the women who walked through those doors, to sign their first mortgages, to receive their first business loans without a man's name beside theirs, those transactions happened. The financial independence they created was real. Sandra's Daycare in Detroit, funded by an $800 loan in 1973, employed 3 women and cared for 14 children by the time the credit union that funded it closed. Patricia's Manhattan apartment, purchased with a mortgage from First Women's Bank in 1975, provided her financial security for the next 4 decades. Eleanor's accounting practice in New York, launched with a $6,000 loan that 3 other banks had refused, employed 3 people, and filed tax returns for over 200 clients by 1985. None of these women appear in any financial history textbook. Their institutions are footnotes, if they are mentioned at all. But the financial independence they built with the help of those institutions was permanent. It did not close when the banks closed. It did not get absorbed when the acquisitions happened. It stayed. That is the thing about a bank that gets built and then forgotten. The money it moved does not disappear with the institution. It stays in the lives of the people it served. Leave a comment below if you or someone in your family banked at one of these institutions. If you remember the name of a women's bank or credit union in your city, the ones that opened in the 1970s and are gone now, leave it below. The names of these institutions, the names of their founders, and the names of the women who walked through their doors for the first time deserve to be recovered. Most of them have not been. Next up, the women who finally had access to credit were walking into a financial system they had largely been taught to stay out of. From the moment they got married, many of them had been given a very specific set of rules about money, who controlled it, how it was tracked, and what a wife was supposed to know and not know. Those rules are the next video.